Welcome everybody. It looks like we're up and running fine. So we'll be looking at some of the big fundamental news stories that are occurring today. It's really been moving the markets yesterday and again today. A lot of swings and volatility, which creates a lot of opportunity to go after potential profits. So it's actually been very nice for the trading side of things. Now, keep in mind as we move forward that all investments have risk. No one trade is guaranteed to bring profits, but each and every trade does have a good potential for profits. And so you just have to manage things correctly with entry points, exit points, and timing, and make sure that you have some kind of plan for managing the risk side of things, meaning make sure you understand your exposure to maybe your stop loss mark, prepare hedge positions, make sure your trade size is appropriate for your balance, these sorts of things. You can also use a special tool that we have on our WebTrader platform and our AvaTrade Go app called AvaProtect, which is available on gold, silver, and all FX pairings, where you can protect against any and all losses that would occur for defined time periods for a small premium cost. And we'll take a look at that feature here in just a little bit. Keep in mind that what we go over in the webinar is meant to be educational and not to be taken as financial advisement. So what is fundamental analysis? In a nutshell, it's the news. It's what's happening around the world, the headlines, the stories. A lot of times they're more regular type events, which we would refer to as regular economic events, like jobs numbers, unemployment figures, GDP numbers, which are coming out today. There's a lot of scheduled economic events today. So on top of all of the volatility that we've had because of the other type of fundamental news, what we refer to as extraordinary fundamental news or economic events, things like the Brexit, things like COVID-19, things like stimulus negotiations in the US, where you just don't know when the headline might hit or what the headline's going to be. Those types of fundamental events are harder to plan for in terms of timing and scope, but you still can be ready for them. And we'll talk about ways of doing that mostly with pending orders, buy stops, sell stops, different types of pending orders that can just sit and wait for the big news to hit whenever it will come. And then you can take advantage of the potential large breakthrough movements. And so two main types of fundamental analysis then that we would do, looking at regular economic events and also considering the extraordinary economic events that are going on around the world. And so when you're on our main website, and today I think we'll spend the webinar in the WebTrader platform rather than going on to the MT4 platform, just to switch things up a little bit. We usually spend the majority of the chart analysis on the MT4, but we'll stay on the WebTrader platform today. And to get to the WebTrader platform, you just log in here, okay? And if you're a client that's been with AvaTrade, say for 2 years, 3 years, 4 years, or longer, you might not have the WebTrader platform on your login because it didn't exist back then when you created your account. So if you log in here and you're straight away in the client area, ask support or your account manager to have the WebTrader platform added so that when you log in, you'll see this platform, okay? And then you get to your client area from here. You go to your My Accounts, upload documents, etc. from this location, okay? Before we take a look at the WebTrader, let's look quickly at trading platforms. And if we go to AvaTrade Go, it also trades on top of your MT4 and MT5 accounts. It's an app that we've created ourselves, and it has the same advanced features, AvaProtect, and advanced take profit and stop loss features for calculating exposure and potential profit built into the app. It's also in the WebTrader platform that we're about to look at. Okay, so both are very similar, the AvaTrade Go app and the WebTrader platform. So let's quickly take a look. First of all, we're talking about fundamental news, right? That's the webinar, fundamental analysis. So how can the WebTrader platform help you with your fundamental analysis? Well, it's pretty simple. We just need to go click on this tab, go to Trading Central, and on all live accounts, you've got these features activated, okay? They're premium features. They cost AvaTrade money, but we supply it free on all live accounts because it is a cost to AvaTrade. It's not available on the demo accounts, all of these features. You do have the economic calendar, but you need the live account for these other features through Trading Central. And the one I wanted to look at is Market Buzz because it fits right into the fundamental analysis that we're doing. So as we click here, we see there are some stories about Apple, about GM, about Tesla. That's why the bubbles are bigger, okay? The bigger bubbles are trending more. So if we say, okay, what's going on with Tesla? They just had earnings numbers, right? Their revenue wasn't as good as expected. We can take a look at the charts and see what happened with Tesla and think about fundamentally what's the best move to try and do. But you see it brings up the articles. And so this is a recent article, even since the earnings numbers, another article that came out. So you click on it and there it is. So Tesla could easily start producing its semi-truck now. It doesn't have enough battery cells to power them, so they're working on the technology on that part. So it's news stories on instruments that you might be interested in trading on right there, available for you. And they're in the order of most recent to older, okay? So as you go down, you'll get the older stories. So very cool feature to have fundamental news right there for you just by clicking on it and reading. And we can see what's going on with Apple. Same thing. Articles come up, most recent news, etc. Now, if we wanted technical analysis from this part of the platform, I know we're in a fundamental analysis webinar, but if you click on analyst views, here's some signals for you. We've got the breakdown of the price levels, support and resistance levels drawn, the direction that the movement is expected to go, some discussion about why that's believed, what indicators were used, etc. Okay, so and there's a timestamp on the signals as they come in, so you can see how recent they are. And you can switch up here the type of signals you'd like to see. Popular Forex, cryptocurrency, major Forex, etc. Okay, it's mostly FX and cryptos. That's what you'll see there. Doesn't get into the stocks and such with the technicals, with the technical signals through Trading Central. And there are some other features here you could check out that are interesting to look at. Now, if we go back to the trading area, we talked about the risk management stuff a little bit. So I want to make sure, even for experienced traders, I know we have a mix in the webinars, and we'll get into the strategies here with today's movements in a moment. But even for experienced traders and for new traders, obviously also some of the features you see here are very useful. If we want to take a look at any FX pairing or gold or silver, you know, if I pull up silver, click on it, there it is in my favorites list. Now I brought it up. You know, if I want to buy or sell on silver, I click on it and I see right away AvaProtect is available. We talked about that feature. We also see interesting thing here when I do take profit and stop loss. So let's say I think silver will climb, I'm buying, but I put my stop loss at a certain price down here, maybe 24.99. And I say, okay, what am I risking? I'm trading a lot size of 0.1. That's 1,000 ounces of silver. And I say, okay, I'm risking 255 to that stop loss. And I might say, well, you know, that's more than 10% of my balance. Maybe I'm not comfortable with that. And so I lower my trade size. Maybe 500 ounces. And now I say, okay, 128, maybe I'm comfortable with that. So it converts to your account currency too. It tells you what your possible profit is, what your possible loss is. And I'm sorry, I was doing the take profit here, not the stop loss, but you get the idea. If I put the price for my take profit and my stop loss, then you can see the possible risk and possible reward. It calculates it for you. Okay, so it's a very nice feature to have. And then also you can use the Ava Protect. So maybe we'll use another example. Let's go with gold. And so I pull up gold. I don't know, I'm buying or selling on gold, whatever it is. And I say, okay, maybe I want 10 ounces of gold, 0.1 lot. And I come down here, I do my stop loss. If I'm buying on gold, then maybe I'm saying, I think 1798 maybe is my stop loss. If it goes below 1800, maybe I give up. And I look and I say, wow, I'm risking, it says possible loss, 423. Okay, so I'm informed, right? I can change my trade size and get to where I say, okay, maybe that's how much I want to risk. Now I realize I better only trade 3 ounces, right? And so the risk management is there. Take profit. Maybe I think it'll shoot up to 1950 again. Okay, whatever the case may be, I see my potential profit, my potential loss, and then at least I'm fully informed with what I'm doing. Maybe I decide there's a lot of volatility now. Instead of putting a stop loss, I'll use Ava Protect. So maybe for the next 3 hours, 6 hours, or the next day or two, and you see the price doesn't go up that much. 1 day, 2 days protection. Maybe I want to get through the next couple business days. Here's the expiry of my protection. Anything I lose during that time period, I get back. The premium cost I pay up front, I can let this trade run for the full 2 days. Any profits are mine. Any loss, I get paid back at the end of this time period. So it's a very cool feature for managing risk. It's something you can play around with as part of your risk management plan. So I think it's important to understand those things. Now, fundamentally, what did I find? We'll come back to the charts here. Maybe we'll expand it to a full chart view, and we'll come back to the chart and take a look at the technicals on entry points and exit points for instruments that make sense based on the fundamentals. So right now, what's happening fundamentally in the markets? Well, one thing that we see is a mixed market right now. So real quick, like on a website like investing.com, you can look right here and see real quick, US markets closed red yesterday. These are the non-futures, so they're not open yet today, not for another couple hours. And you see they finished deep in the red. Today, what's happening? Mixed. The Dow Jones is up a little bit. The S&P 500 is down a little bit, kind of flat. Okay, they were pretty red earlier and recovered. And the volatility is actually way down. That's a huge, huge drop in volatility, over 13% drop in volatility. Okay, the VIX volatility index, that's what this is. And so that gives you a quick picture of what's happening today. Volatility reversed from yesterday, it was up over 20%, 25%, this volatility index, which many times is referred to as the fear index. So fundamentally, you could see right away yesterday, there was a lot of fear in the markets. The volatility index was up 25% at one point in the day, even more. And now it's the opposite. Volatility is down over 13% today. Okay, so if you look at a 2-day movement of it, it's still up though, right? If it went up 25% yesterday and it's only down 13% today, it's still up for the last 2 days. So keep that in mind. So there's been a little bit of a calming effect. Volatility is back down some today, but still up if we count yesterday. The market's a little confused, right? We can see that green and red at the same time. US dollar's trying to strengthen. That tells you there's some fear still. Okay, there is still fear in the markets. Now we take a look then at the headlines. US futures mixed. We already said that. Fourth quarter GDP numbers and corporate earnings due out of the US. And we can say, well, where do we find those? On investing.com, if you just click on the main landing page, you see at the top, economic calendar and earnings calendar. So if we go to the economic calendar, we can see, well, what's coming up and what already occurred. We see a slew of announcements came in out of the European Union, South Africa. The announcements out of the EU, for the most part, have been pretty solid. Okay, green means better than expected. Unemployment rate, Spanish unemployment rate, better than expected. Italian consumer confidence, better than expected. PPI, oh, that's the czar. We'll skip it for now. Business and consumer survey, better than expected out of the European Union, etc. Okay, we see either as expected or better than expected on all of these announcements right here out of the EU. The South African rand, it was mixed with its announcements, one good, one bad. And then we look, well, what's coming up still? We've got, first of all, the European Central Bank has a speaker later today, okay, German, Buba Wermeling speaks later today, okay? That's a big deal when they're speakers talking about economic policy, economic sentiment, that sort of thing. Now, we're also looking out of the US. We've got GDP numbers coming. That's the headline we already read. We've got price index. We've got initial jobless claims, etc. Retail inventories. You get the idea. New home sales, all major announcements out of the US. Okay, along with some smaller ones, natural gas storage, etc. So huge, huge news day out of the US, especially. And so combine that potential for movement with all of those big announcements coming with the fact that yesterday there were earnings numbers that came in. If we want to look at, here's a headline: American Airlines posts record annual loss. Okay, I think that's expected, right? The airlines in general have been hit with the pandemic, but that doesn't help the sentiment, right? It adds to the fear after the big drop yesterday in the markets. And so we move on and we say other weird things happened yesterday, like GameStop. If you haven't saw what happened, GameStop gained like 200% plus in stock value in one day. And there's concern that there's market manipulation on the markets. They go on to say here that Wall Street and Main Street are kind of in a tug of war. And they're saying that this movement on GameStop was maybe driven by an army of individual traders who work through online apps like Robinhood. And they discuss through, it's like a social media platform, they discuss moves that they'll all do at once on different stocks. Okay, so that's actually being looked into now by the authorities as to whether there needs to be better regulatory scrutiny over these apps and such, because it caused huge, huge movements on these particular stocks. And these are mostly young, techie investors that are communicating on social apps about things they're interested in, like GameStop. Okay, and so that's what happened yesterday, and that created fear on the markets. To see something like that created fear, and that created movement, which created opportunity for all of us to trade on the greater market. So as GameStop was shooting up, it created some fear as well, along with the other reasons for the fear, and that just added to it. We just looked at this a moment ago. If we want to look at the earnings numbers, earnings calendar, it's here right next to the economic calendar. You really should check this out if you're trading on stocks. And we can look, yesterday was a big one. Apple came in better than expected. Tesla came in worse than expected for the earnings per share. Well under. Expected to be over $1 per share, and it was 0.8. So it was in the red. And here's Boeing. Boeing came in really bad. Expected to be negative 1.6. It was negative 15.25. Huge, huge, huge difference there. 15 times more negative than what was expected because of the pandemic. So this was really bad news for Boeing, and not good news necessarily, not as good as expected for Tesla. Okay, and then we can go to Brexit. First flashes of Brexit trade trouble appear in UK data. So that's a little unnerving for the pound. And that takes us then to getting on the charts. So let me read. I see a couple questions that have popped up. That's Nicole, that's what I'm about to do, is show you how do you use this information now to trade. So we're going to go to some of the charts, and we're going to take a look at possible entry points. Okay. Andreas, good question. Economic calendar shows the scheduled economic events like the GDP numbers, factory production numbers, etc., that are scheduled to be released at an exact time on an exact day. That's the economic calendar. The earnings calendar shows you the quarterly earnings that are released, and it also shows you the exact day and timing of when those earnings numbers are going to be released. Companies do that quarterly, typically. So every 3 months, they say it's earnings season again, right? Right now it's earnings season. All the major companies are reporting their earnings numbers, and you can look at the calendar, look at today's calendar, tomorrow's calendar, and we have them listed on our website as well to see, okay, which stocks have earnings reports coming up. And many times you can trade leading up to the numbers in anticipation of good numbers. Many times that moves stocks quite a bit, even before the numbers are released. And then after the numbers are released, if they're disappointing or better than expected, you also then get an idea of which way to trade. Okay, so let's then take a look at the charts. And like I said, I think we'll stick to the WebTrader for today. So what we're looking at here then, let's first look at gold. And we think about how gold functions as a safe haven to inflationary pressures, and also the fact that as the USD strengthens, gold tends to pull down. Okay, so it has that kind of double relationship. So if we then expand the chart on gold, which I have showing here, and I can zoom out just a little bit on the WebTrader. If you just scroll back a bit, you zoom out, okay, and then I can take a look and say, okay, where do I see support levels, resistance levels? Let's get off the 1 minute candles and go to maybe 15 minute. And I'll zoom back a bit on those. And we can see that overall, there's been some downward movement. Let me get rid of this line. Okay, and so overall, what we've got going on with this movement, and I'll just drag this out of the way up here. So we see a downtrend, right? We see the movement headed in this direction, downhill, and then we see some support get found down here. And so it bounced, 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 but the movement is tightening. You see it's getting nice and tight over here. And let me just adjust this for a second. And we'll draw a price line right here. Okay, you see it has some nice tools on the platform, and we see it found some support there, down around 1833. Now, with the fear hitting the market and the US dollar strengthening, gold has pulled down, and that's what we're looking at here on this chart. The question is, what do you think will happen next according to the fundamental news? Now, soon, the US is expected to pass some stimulus. And so as stimulus gets passed, what do you think happens to the strength of the US dollar? If the US decides to print $2 trillion in stimulus, what do you think happens to the strength of the US dollar if more dollars are being printed and handed out as kind of free money or cheap money? Yeah, exactly. The strength of the USD would tend, or any currency, when there's large amounts of stimulus being handed out and low interest rates, it tends to devalue the currency. And so gold tends to strengthen against the USD for two reasons. Because the USD is weakening because of stimulus, and because gold is an inflationary safe haven. Exactly. Many of you are using the word inflation. It's exactly right. Gold tends to be a safe haven against inflation. And what better to cause inflation than printing a lot of money and handing it out? Okay. Emmanuel, good question. And many of you may have this question. Should you choose gold or should you choose gold with a date next to it? We offer both. Gold is traded on spot, which does not expire and will continue to go without any rollovers. Gold, let's say February, or gold March. If it's listed with a date, and the same with our oil offerings, etc. If it's listed with a date next to it, it means it will expire. And it also means it won't roll over. Okay, it just expires. So gold February 21, that means if your trades are still running when it hits that date, your trades will automatically close whatever the market price is. Okay, some prefer to trade that way. Others prefer to trade on spot where there's no rollovers. And then we also offer instruments that are traded on futures but do have rollovers. That would be our crude oil. So if you're trading crude, it rolls over on the rollover date. If you're trading crude with an expiry date next to it, if it says crude February something, then those don't roll over. So general rule of thumb, if there's a date listed next to the instrument name, that means it will expire and not roll over. Okay. All right. So then we might be looking and saying, okay, if we look at the bigger picture, maybe 4-hour candles, and we say, what can we do to think about trading on this? I can slide this support level down just a little bit. You see here, look at this support over here. Support up, support up. And for those of you that are new, support and resistance, support is where the price has trouble dropping below. And you can see how many points of contact. 1, 2, 3, 4, 5 times held here. 6 held, 7. It broke once and went right back up. And now it's just above that price area now. So 7 out of 8 times when it hit 1820 or so, the price held. And the one time that it broke, it went right back up. So if you feel that stimulus should drive up gold fundamentally, that's the fundamental news we're talking about. Fear about the economy. We just looked at all kinds of headlines, why there's fear on the markets. Well, what do politicians do when there's fear about an economy? They throw money at it, free money. And so free in quotation marks, right? It's never truly free. But they try and throw money at the solution. And so that is an inflationary move and could, no guarantee, but that fundamental situation could drive gold up. Okay, so if you take a trade size to where you can put your stop loss below 1820, then if your stop loss is down here where I'm pointing, then you're below 90% or so of the last times it tried to hit, it went back up. So your stop loss could be pretty safe down there, with one exception where it went down to 1800. And what's your potential for profit? Well, we can take a look and say, well, the potential for profit's up here. Okay, look at that. If you follow this purple line all the way up, okay, this line I drew across, 1952 or so, that might be a spot where it potentially could reach. Okay, it actually was above 2000, right? I'm being conservative here, maybe with saying it could reach 1950 or so. So this looks like a spot where this entry point, your risk is a lot less to get your stop loss down here compared to your potential for profit to the major resistance point up here. So then if we want to take a trade on this, it's very simple. Let's minimize the chart a little. Let's click buy. And we can prepare a trade that would make sense. Now, this is just a simulation, but let's say you wanted to do 5 ounces and you wanted your stop loss below this line. And you see how convenient this is to have this right next to you. I can see, okay, I wanted my stop loss below this area. I'm gonna put it at 1818 maybe. So stop loss 1818. Take profit 1950. This is a longer term move. I'm waiting for like $100 move in gold, right? A little bit more. And so then I go in with whatever trade size I want. I can see what I'm risking, $113. Maybe that makes sense to me. Maybe I decide, no, I want to go a little smaller. Okay, now my risk is under 100. Okay, so you see how it acts as a trade calculator for you, and then there we are. Okay, I'm in. And I've got my stop loss below this line, my take profit just below the resistance. So it would have to break the support for me to give up. And if it gets near this resistance, I take the profit just before the resistance. And all of this is based on fundamentals. It's based on the potential for large stimulus coming, and it seems like eventually it will in the US. Any questions or comments on that? Or just type OK if you're with me. The combination of the fundamental setup with the technical. Okay, great. So any questions, please type them. And if you want to see your open positions, you just click here. All right, here's my open trade running. If I want to see the information about it, I click here. I can see my information, stop loss, take profit, the P&L I'm in, everything's here. I can edit it if I want to change it, no problem. Okay, so let's go back to the trade area. And why might we look at the GBPJPY? We saw an article about maybe some concern about the effects of Brexit on the economy, right? The trade data. And so it might make sense to pull up the GBPJPY. Why pair the GBP against the yen? If you think the pound might have some trouble and have some bearish pressure to push it down, why pair it against the yen? What happens to the yen when there's fear on the markets like we just saw? We saw a bunch of fundamental news that garners some fear on the markets. Why should the yen strengthen if there's fear? What is the yen considered? Correlated markets? I'm thinking more along the lines of like gold. Gold is a safe haven, right? Investment. The yen also happens to be a safe haven currency. Okay, when there's fear on the markets, the yen tends to strengthen. Okay, and so if you think the pound should drop because of fear, then the yen should strengthen, right? And so it's like pairing a weak horse against a strong horse. So fundamentally, right now, it makes sense to pair the pound against the yen because the yen maybe should be strong today. Fear is up over the last 2 days. It pulled back halfway, but that tells you it didn't pull back all the way. Volatility index was up 25% yesterday and it only came down 13. So it's still up over the last day and a half, volatility and fear. And so that tells you there's still fear out there. And you can see right now the pound on the 1 minute candles anyways trying to pull down. Let's take a look. Let's do a bit of technical analysis. I'll just scroll back with my mouse so we can see better. And let's go to maybe 30-minute candles. Okay, we see that there's some resistance up here. If I want to draw a resistance line, a price line, I could say right here I see some resistance. Okay, it hit and dropped, hit and dropped. It broke over once and came right back down, hit and dropped, hit and is dropping now. Okay, so that's what I see on 30-minute candles. Let's go to maybe 2-hour candles. There's that line I drew. Okay, here's the line. I don't see any other resistance. Let's go to 4-hour candles. Scroll back. Again, it's at a high that it hasn't hit for a long time. The markets were going up like crazy, right? The markets went up like crazy. The pound went up too. Fear was down, pound, and the markets were climbing. Fear hit, the markets crashed. There's pressure on the pound and strengthening of the yen potentially. And so let's go to 1-day candles. Get the bigger picture view. And this is what you might call taking an inside out look. Now it makes sense why the market dropped from where it is now. Follow the resistance line over. Look where it matches up perfectly. And I didn't even look at the 1-day candles first. Why is the pound reversing from the spot that it's reversing now? Look at back here on the 1-day candles. That is back months of time, right? We're looking at each candle is 1 day and we're back a large number of candles. So here's a resistance level that's been there for weeks and weeks, even months. And so now if we zoom in on that and go back to like 1 hour candles, we can say, okay, where would we put our stop loss, our take profit? And I can easily see right now, if I expect the pound to give up ground because of the fundamental news situation, fear on the markets, some bad news about Brexit, we just read a headline about it, then I'm going to put this as my support level down here. This is the area of support. And if you're being patient, you might go to this lower support level where the market hit here and bounced back up. Perhaps it pushes down to this mark. If you're more of a scalper, you might say, no, I'll get out at this first support level here. Okay, this is a more recent support where it hit and went back up. It hit and went back up. Okay, so short-term move, taking profit on this support. Longer-term move, you might look to take profit, down here. Okay, I tend to be kind of in between. So this might be a spot. This is a middle level where there's a middle level support level here where it hit and went up, hit and went up. You see this level, this area here was old resistance on this side as well. So resistance down, okay? That's a small level, price level that's a compromise between getting out early here and taking it all the way to this price level down here. So that might be a spot that makes sense to some traders. And then we say resistance. Well, if it breaks above this high point up here, right, then it's broken the resistance if it breaks above this price. And remember, this spot where it plunged is the same spot on the one-day candles way back, weeks back, that it also hit and plunged. Okay, so this is a very significant price level right here. So then we say, okay, let's get out of full chart mode. Let's maybe think about selling on pound JPY with this fundamental situation. And then I start to look at stop loss at 142, maybe 8, something like that. So stop loss 142.88. That gets me above the resistance. Maybe I just want to cheat it up a little bit more and say 90. And my take profit, if I'm going with this support level here, which it's just above this little area of support where it hit and went up, to try and make sure on a plunge you get your profit before it goes back up, maybe 141.76 is what I'm looking at here. And obviously you could do whatever makes sense to you for your plan. Okay, and so then I look and I say, okay, I'm risking 48 to make 61. Okay, that you might find that reasonable. You might say, no, you know what? I'd rather go to this support level down here. That's a more major support level and go after a larger profit. And that's okay as well. So 141.34. And you see right away, it shows, okay, then you'd make more than double what you're risking if it goes to that price. And you only need to be right 50% of the time to basically break even or make a small profit. And so then you could use AvaProtect if you wanted to instead. Okay, instead of doing a stop loss, you could have a small fee for like 2 days protection. That would be fine as well. Whatever you prefer. Now maybe I say, you know what, I want to risk 100, so I'm going to increase the trade size. And there, now I'm risking 98, and my potential profit's 215. Okay, a little better than 2-to-1 risk reward, but you set up the trade size based on what makes sense to you, and then you put it in action, right? Now I'm on a demo account here. This is a simulation, but if you feel it makes sense, then that's something you could think about doing, because the fundamental news fits this move, and so does the technical analysis, with a nice resistance level that's backed up for days and days if we go to one-day candles, and a support level that looks like a pretty nice support level here to think about taking profit if it was to get down to that spot. Okay. I'll ask the same thing. Type OK if you're with me thus far. If you have any questions on the simulation here with GBPJPY. otherwise called sterling yen for the traders who have been trading a while. Yeah, if you look back, further back, you could find larger trends as well, Matthew. So we're looking at more of a shorter move here that could occur maybe in a day's time even. But you can go back and look at bigger picture as well, for sure. And yeah, the resistance, we looked at that going back. If maybe you missed it, Matthew, but we looked at the 1-day candles, okay? And you see there's huge resistance back here, you see here. And that's the exact same spot that it reversed from here. So these are 1-day candles, that's way back, right? And so we took a peek at that, and that helped us with the decision in the shorter term on the 1-hour candles of what we might decide to do, okay? Ollie, good question. What about NASDAQ? Let's look. Why not? So what's nice about this platform is you just start to type it and there it is. On the MT4 and MT5 platform, you've got to manually search. There's not a good search function on those platforms. So here you can just type it and there it is. And you can add it to your favorites list just by clicking a star. You see here, if I click the star, then when I go to my favorites, it's in my favorites list. Okay, so very easy to find instruments like this. So now we've got the NASDAQ chart up. We see what happened. Okay, these are, oh, that's 1 minute. Let's switch off 1 minute candles. Let's go 1 hour. And it looks the same as the 1 minute, actually. We see what happened yesterday, right? We see the pull down in the market, big drop off, and now leveled off. Okay, the fear is kind of leveled off, and the question is, okay, what happens next? Well, what do you think will happen with the NASDAQ if eventually here, after all this fear that's in the headlines right now, if eventually here the politicians in the US start to get close to an agreement on 1.9 trillion in stimulus or whatever it's going to be, what do you think happens to the NASDAQ, the S&P, and even the European indices as well, because it's such a global marketplace? They also reacted to the last stimulus in the US, and the US reacted positive to stimulus in the European Union. What do you think happens to the major indices if a deal looks like it's going to be reached? What do you think would happen to the NASDAQ? If the expectation is, wow, they're getting close to 2 trillion in stimulus, what do you think happens to the NASDAQ? Probably goes up. Yeah, that would be my guess. You probably, and many times, the faster you have a pullback in the market, like we saw yesterday, the faster you see a drop, eventually, when the movement starts to refill that drop, you get a more rapid rise. And an example is if you look at 1 week candles. If you look at 1 week candles, you see the huge drop off with the pandemic, right? NASDAQ, Dow Jones, the FTSE, the DAX, everything plunged with the COVID-19 pandemic. And they kept saying it's the largest, fastest drop ever. Well, what happened after the largest, fastest drop ever was the largest, fastest rise ever, right? I mean, the markets are at new highs already in such a short period of time. So the more rapid the drop, many times the more rapid the recovery back up, okay? There just needs to be a stimulus for that recovery. And literally, it might be a stimulus out of the US that stimulates the recovery back up in the markets, okay? Now, that's not to say the markets couldn't drop further still. There's still some fear out there. And we saw that in the volatility index, that it didn't come all the way back down from the how high it went yesterday, okay? And so there's still fear out there, and we still could see some dropping in the markets. So we better take a little better look than just the 1 hour candles to think about entry points. So we start to look at 2 hour candles. Let's go to 4 hour candles. And again, I'm taking what I call an inside out look. We looked at the close up, and now we're looking at the bigger picture. If this little price level here breaks, and let me show you. If this price level here breaks, this is where we're teetering on support, okay? This is where it tested yesterday. It hit and went up, hit and went up. This is where we're at right here. Why did it bounce from this price? Look over here. This is a support level here. Resistance, resistance, resistance. This is an old resistance level. That's the spot where it found support. If the movement breaks this price, you could see the market then drop down to the next support level down here. Okay, you could see a drop from here down to the next price level. Okay, so when the market opens today, we'll get an idea. Which way is this going to move, right? Is it going to push down and test the support level here? I suspect the market might open up with a bit of fear and test this support level. I think the NASDAQ might test this support level, and if it breaks it, could drop to the next support level. But somewhere in this zone, you could start to think about, is it time to go the opposite direction, right? Knowing that stimulus is potentially in the future. So, you know, if you want, you can take a shot at a long position now and just put your stop loss below this support. If it breaks this support, you get out. There's your stop loss. Then if it gets near here, you have a buy. What kind of pending order buys from here? It's called a buy limit, right? It buys from a lower point, a buy limit. But with the WebTrader, you can program your pending order to buy from whatever price you want, and you don't have to tell it what kind of pending order. It'll make it the right type. It's simplified here. You're saying, could the market not come down to 12,468? It certainly could. That's the next price level, isn't it? Here's the next support level down here, okay, around 12,500. So we're seeing this support level tested, right? If it breaks this support, this is the next level it will test. Could potentially test this level. If it breaks that level, this is the next level of support down here. Now that would be quite a pullback, quite a plunge. It could happen, right? So you have some options here. Knowing that there's fear on the market, you probably don't jump in and buy right now in the NASDAQ. Just because this support level was tested twice and held, it may be tested quite heavily again today, all right? A potential move, if you think the markets will drop further, drop further, would be to put your stop loss right here, okay? There's your level of resistance right in this area. You see it went up and dropped, went up and dropped. So it's right around 13,000, right? So if you get to 13,001 with a stop loss and you're selling on the market, and you could put your take profit down at maybe this level of support down here, take profit down here. So if you feel the drop is not over, that it will push down further, then shorting the market now with a market move with your stop loss just above this resistance. Resistance, if you were going up, there's resistance right here, okay? And you see it in this area here too. And so shorting the market, you could do market sell. And listen, I'll do that now just to demonstrate, okay? And I fully acknowledge we could have a recovery back up if a headline hits right now, stimulus package likely to be passed this week. You know, if something like that hit a headline, the market would go flying back up. So you have to protect yourself with a stop loss in a spot that makes sense, right? So if I'm saying I want to sell on the NASDAQ, and I'm doing a market move, sell. Okay, my stop loss is probably going to be 13,100, just above this little resistance area. So just to protect myself, 13,100 and change. Okay, and my take profit is either the first level of support or the second. And I'm probably, if I'm making the move, expecting a larger move than just to where it tested yesterday. So then I'm looking at 12,765 or so for a take profit. As an example. 12,000, I think that didn't type right. 765. The seven's in the wrong spot. Now I've got it. Okay, so now I look and I say potential profit 234, risking 110. Okay, maybe that's a little heavy for my balance. And I decide that's not a move I want to do. Or maybe I say, okay, that's reasonable. Now I could cheat my stop loss closer, but you don't want to mess up your strategy, right? So if that's the move I like, I can only go 0.01. It's the smallest trade size I can do. So at least I know my risk going into it, right? And you see there's no AVA Protect for the indices. It's gold, silver, and FX. So if I like it, I sell, right? And then at the same time, what kind of pending order could I put down here if it does hit 12,765? If I wanted to buy from down here, okay, great. So now I'm saying I'll sell now, but if it drops to execute when price hits 12,765, I did it again. Okay, there we are, 12,765. It's not letting me type properly. Here we are. It keeps flipping my number. Here I'll manually go up. 765. There we are. For execute when price hits. That's this level right here. Okay, that's this level right here. 12,765. Then I want to buy, so I put my buy. My stop loss. Okay, I could put down here just below that support level someplace, maybe right there. Okay, 12,690. And I think if I just highlight this, $12,690. It doesn't want to accept my 90. No problem. We'll get it there. Apologies. Now we got it. Okay, 12,690. You just have to highlight it and then make sure your cursor's in the right spot when you're typing. It's good you're learning with me here on typing on this platform. I haven't used it a whole lot. Like I said, it's pretty new. So very nice. We've got it set up. I know my possible loss on my pending order, $75. Maybe I say, okay, I'm comfortable with that. Or I could change trade size to a larger trade if I wanted to risk more. Okay, so I've got the smallest trade here. My take profit, I could put up at this resistance level here, 13,096. So maybe just before that at 13,000 even. Okay, 13,000 take profit. So my possible profit, 235 just before this resistance. Taking a buy position from here if it hits that support with my stop loss just below, risking 75 to make 235. And so that's a pending order ready to go. And then I see over here on the platform orders. That's my pending order. There's one. That's what I just created. Here's my open positions. I've got 3 trades running. Okay. We're in profit on our sell on the NASDAQ, but all of these are just getting going. Okay. All right. Any questions so far? If you look in the order window, you see there is no trailing stop function, Ollie. Okay. There's no trailing stop function on this platform. However, if you go to your MT4 platform, you'll see the trade. We just opened these trades, right? If you go to your MT4 platform, you'll find those trades. Right click over the open trade on the MT4 platform, and you'll see the option to add a trailing stop. Okay, so add the trailing stop from the MT4. We've got a new version of the WebTrader coming out, and I believe it'll have trailing stop as an option right on this platform. But for now, you can add the trailing stop on the trades that you open from here. You can add the trailing stop onto them from the MT4 platform after they're opened. Okay, and it's the same on the MT4. You can't add it until after it's opened. So it functions the same way. Right click over the open trade, choose trailing stop, and you've got the option to add different distances or a custom distance for the trailing stop. Lewis, we're about out of time. We've been going for about an hour now, so we're gonna cut things off here. Lewis was asking, when you have conflicting news stories, how do you decide what to do? And my first thought is maybe that's when you don't trade on that instrument, right? If you're confused and you're looking at the fundamental news and you feel like, man, I really can't get a grasp on what's going to happen, then maybe you don't trade that day, at least not on that instrument. I can see pretty good in the news today. There's a lot of fear on the market still. And we can see it on the technical analysis too, on the charts. Everything that pushed down to a support level bounced a little bit, but it didn't go flying back up. They're still down. So something's still creating fear on the markets. Not to say that a breaking headline about stimulus wouldn't reverse things, but for now, there's still some fear on the market. And we're looking at opportunities like we just did with NASDAQ that moved right into the money once we opened it, right? So we can see the fear is there. The question is how long will it last? Potentially when the US market opens today, you could see a big rush, a big movement, okay? So good luck with your trading today. I think you'll see some big movements on gold, oil, the major indices. The pound JPY, I think, is one that could have some big movement. Go after your entry points and line up what you feel is right based on the fundamental news that we're seeing. And keep an eye on the recent headlines too, because that fundamental news can swing on you, okay? All right, bye for now. Thank you for joining.